That was funny. That was funny. That was funny. That was funny. First of all, I'm going to read 4 pages. I don't care about the scope. Financial reporting frameworks often discuss the concept of materiality in the context of the preparation and fair presentation of financial statements. Although financial reporting frameworks may discuss materiality in different terms, they generally explain that misstatements, including omissions, are considered to be material if there is a substantial likelihood that individually or in aggregate they would influence the judgment made by a reasonable user based on the financial statements. Judgments about materiality are made in light of surrounding circumstances and are affected by the size or nature of a misstatement or a combination of both. Judgments about materiality involve both qualitative and quantitative considerations. Judgments about matters that are material to users of the financial statements are based on a consideration of the common financial information needs of users as a group. The possible effect of misstatements on specific individual users whose needs may vary widely is not considered. Such a discussion about materiality provides a frame of reference to the auditor in determining materiality for the audit. If the applicable financial reporting framework does not include a discussion of the concept of materiality, the characteristics referred to in paragraph 2 provide the auditor with such a frame of reference. 4. The auditor's determination of materiality is a matter of professional judgment and is affected by the auditor's perception of the financial information needs of users of the financial statements. For purposes of determining materiality, the auditor may assume that reasonable users have a reasonable knowledge of business and economic activities and accounting and a willingness to study the information in the financial statements with reasonable diligence, understand that financial statements are prepared, presented, and audited to levels of materiality, recognize the uncertainties inherent in the measurement of amounts based on the use of estimates, judgment, and consideration of future events, and make reasonable judgments based on the information in the financial statements. The concept of materiality is applied by the auditor both in planning and performing the audit, evaluating the effect of identified misstatements on the audit, evaluating the effect of identified misstatements on the audit and the effect of uncorrected misstatements, if any, on the financial statements, and informing the opinion in the auditor's report. In planning the audit, the auditor makes judgments about misstatements that will be considered material. These judgments provide a basis for determining the nature and extent of risk assessment procedures, identifying and assessing the risks of material misstatement, and determining the nature, timing, and extent of further audit procedures. The materiality determined when planning the audit does not necessarily establish an amount below which uncorrected misstatements individually or in the aggregate will always be evaluated as immaterial. The circumstances related to some misstatements may cause the auditor to evaluate them as material even if they are below materiality. It is not practicable to design audit procedures to detect all misstatements that could be material solely because of their nature, that is, qualitative considerations. However, consideration of the nature of potential misstatements in disclosure is relevant to the design of audit procedures to address risks of material misstatement. In addition, when evaluating the effect on the financial statements of all uncorrected misstatements, the auditor considers not only the size but also the nature of uncorrected misstatements and the particular circumstances of their occurrence. Effective date. Objective. The objective of the auditor is to apply the concept of materiality appropriately in planning and performing the audit. It's weird. The first part of it wasn't even requirements. All of the stuff was weirdly something. Definition. Wait. performance materiality, the amount or amounts set by the auditor at less than materiality for the financial statements as a whole to reduce to an appropriately low level the probability that the aggregate of uncorrected and undetected misstatements exceeds materiality for the financial statements as a whole. If applicable, performance materiality also refers to the amount or amounts set by the auditor at less than the materiality level or levels for particular classes of transactions. Account balances or disclosures. Performance materiality is to be distinguished from tolerable misstatement. Requirements. Determining materiality and performance materiality when planning the audit. When establishing the overall audit strategy, the auditor should determine materiality for the financial statements as a whole. If, in the specific circumstances of the entity, one or more particular classes of transactions, account balances, or disclosures exist for which there is a substantial likelihood that misstatements of lesser amounts than materiality for the financial statements as a whole would influence the judgment made by a reasonable user based on the financial statements, the auditor also should determine the materiality level or levels to be applied to those particular classes of transactions, account balances, or disclosures. The auditor should determine performance materiality for purposes of assessing the risks of material misstatement and determining the nature, timing, and extent of further audit procedures revision. As the audit progresses, the auditor should revise materiality for the financial statements as a whole, and if applicable, the materiality level or levels for particular classes of transactions, account balances, or disclosures in the event of becoming aware of information during the audit that would have caused the auditor to have determined a different amount or amounts initially. If the auditor concludes that a lower materiality than that initially determined for the financial statements as a whole, and if applicable, materiality level or levels for particular classes of transactions, account balances, or disclosures is appropriate, the auditor should determine whether it is necessary to revise performance materiality and whether the nature, timing, and extent of the further audit procedures remain appropriate. Documentation. The auditor should include in the audit documentation the following amounts and the factors considered in their determination: materiality for the financial statements as a whole, if applicable, the materiality level or levels for particular classes of transactions, account balances, or disclosures, performance materiality, any revision of A through C as the audit progressed. I have finished the first one. I am now done with 4 pages out of 21. I have to read 2 7-page ones. Gosh dang my life. Performing audit procedures in response to assessed risks and evaluating the audit evidence obtained. This section addresses the auditor's responsibility to design and implement responses to the risks of material misstatement identified and assessed by the auditor in accordance with section, and to evaluate the audit evidence obtained in the audit of financial statements. And to evaluate the audit evidence obtained in an audit of financial statements sections address the responsibility to form an opinion effective day objective. The objective of the auditor is to obtain sufficient appropriate audit evidence regarding the assessed risks of material misstatement. Through designing and implementing appropriate responses to those risks, definitions, substantive procedure. An audit procedure designed to detect material misstatements at the assertion level. Substantive procedures comprise tests of details, classes of transactions, account balances and disclosures, and substantive analytical procedures. Test of controls. An audit procedure designed to evaluate the operating effectiveness of controls in preventing or detecting and correcting material misstatements at the assertion level. Overall responses. The auditor should design and implement overall responses to address the assessed risks of material misstatement at the financial statement level. Audit procedures responsive. Audit procedures responsive to the assessed risks of material misstatement at the relevant assertion level. The auditor should design and perform further audit procedures whose nature, timing, and extent are based on and are responsive to the assessed risks of material misstatement at the relevant assertion level. In designing the further audit procedures to be performed, consider the reasons for the assessed risk of material misstatement. Consider the reasons for the assessed risk of material misstatement at the relevant assertion level for each class of transactions, account balance, and disclosure, including the likelihood of material misstatement due to the particular characteristics of the relevant classes. Oh my gosh, my chair! No! How do I fix it? No. It's funny. That's funny. Is it fixed? No. Well, so much for that. Man. I'm probably just going to replace it with a different chair. Because the likelihood of material misstatement due to the particular characteristics of the relevant class of transactions, account balance, or disclosure, the inherent risk. Whether the risk assessment takes account of relevant controls, the control risk, thereby requiring the auditor to obtain audit evidence to determine whether the controls are operating effectively. That is, the auditor intends to rely on the operating effectiveness of controls in determining the nature, timing, and extent of substantive procedures. And obtain more persuasive audit evidence, the higher the auditor's assessment of risk. Tests of controls. The auditor should design and perform tests of controls to obtain sufficient appropriate audit evidence about the operating effectiveness of relevant controls if the auditor's assessment of risk of material misstatement at the relevant assertion level includes an expectation that the controls are operating effectively. That is, the auditor intends to rely on the operating effectiveness of controls in determining the nature, timing, and extent of substantive procedures, or substantive procedures alone cannot provide sufficient appropriate audit evidence at the relevant assertion level. In designing and performing tests of controls, the auditor should obtain more persuasive audit evidence the greater the reliance the auditor places on the effectiveness of a control. Nature and extent of tests of controls. In designing and performing tests of controls, the auditor should perform other audit procedures in combination with inquiry to obtain audit evidence about the operating effectiveness of controls, including how the controls were applied at relevant times during the period under audit, the consistency with which they are applied and by whom or by what means they were applied, including, when applicable, whether the person performing the control possesses the necessary authority and competence to perform the control effectively, and determine whether the controls to be tested depend upon other controls, indirect controls, and if so, whether it is necessary to obtain audit evidence supporting the operating effectiveness of those indirect controls. Timing of tests of controls. The auditor should test controls for the particular time or throughout the period for which the auditor intends to rely on those controls, subject to paragraphs 12 and 15 that follow, in order to provide an appropriate basis for the auditor's intended reliance. Using audit evidence obtained during an interim period. If the auditor obtains audit evidence about the operating effectiveness of controls during an interim period, the auditor should obtain audit evidence about significant changes to those controls subsequent to the interim period and determine the additional audit evidence to be obtained for the remaining period. Using audit evidence obtained in previous audits in determining whether it is appropriate to use audit evidence about the operating effectiveness of controls obtained in previous audits. The length of time period that may elapse before retesting a control. The auditor should consider the effectiveness of other elements of internal control, including the control environment, the entity's monitoring of controls, and the entity's risk assessment process. The risks arising from the characteristics of the control, including whether the control is manual or automated, the effectiveness of general IT controls, the effectiveness of the control and its application by the entity, including the nature and extent of deviations in the application of the control noted in previous audits, and whether there have been personnel changes that significantly affect the application of the control, whether the lack of a change in a particular control poses a risk due to changing circumstances, and the risks of material misstatement and the extent of reliance on the control. If the auditor plans to use audit evidence from a previous audit, about the operating effectiveness of specific controls, the auditor should perform audit procedures to establish the continuing relevance of that information to the current audit. The auditor should obtain this evidence by performing inquiry combined with observation or inspection to confirm the understanding of the specific controls, and if there have been changes that affect the continuing relevance of the audit evidence from the previous audit, the auditor should test the controls in the current audit. If there have not been such changes, the auditor should test the controls at least once in every third audit, and should test some controls during each audit to avoid the possibility of testing all the controls on which the auditor intends to rely in a single audit period, with no testing of controls in the subsequent 2 audit periods. That If the auditor plans to rely on controls over a risk the auditor has determined to be a significant risk, the auditor should test the operating effectiveness of those controls in the current period. Evaluating the operating effectiveness of controls. When evaluating the operating effectiveness of relevant controls, the auditor should evaluate whether misstatements that have been detected by substantive procedures indicate that controls are not operating effectively. The absence of misstatements detected by substantive procedures, however, does not provide audit evidence that controls related to the relevant assertion being tested are effective. If deviations from controls upon which the auditor intends to rely are detected, the auditor should make specific inquiries to understand these matters and their potential consequences and should determine whether the tests of controls that have been performed provide an appropriate basis for reliance on the controls. Whether additional tests of controls are necessary or whether the potential risks of misstatement need to be addressed using substantive procedures. Substantive procedures, irrespective of the assessed risks of material misstatement, the auditor should design and perform substantive procedures for all relevant assertions related to each material class of transactions, account balance, and disclosure. The auditor should consider whether external confirmation procedures are to be performed as substantive audit procedures. The auditor should use external confirmation procedures for accounts receivable except when one or more of the following is applicable. The overall account balance is immaterial. External confirmation procedures for accounts receivable would be ineffective. The auditor's assessed level of risk of material misstatement at the relevant assertion level is low, and the other planned substantive procedures address the assessed risk. In many situations, the use of external confirmation procedures for accounts receivable and the performance of other substantive procedures are necessary to reduce the assessed risk of material misstatement to an acceptably low level. Substantive procedures related to the financial statement closing process. The auditor's substantive procedures should include audit procedures related to the financial statement closing process, such as agreeing or reconciling information in the financial statements with the underlying accounting records, including agreeing or reconciling information in disclosures, whether such information is obtained from within or outside of the general and subsidiary ledgers, and examining material journal entries and other adjustments made during the course of preparing the financial statements. Substantive procedures responsive to significant risks. Let's see here. 1.5 plus 6. Three plus If the auditor has determined that an assessed risk of material misstatement at the relevant assertion level is a significant risk, the auditor should perform substantive procedures that are specifically responsive to that risk. When the approach to a significant risk consists only of substantive procedures, those procedures should include tests of details, timing of substantive procedures. If substantive procedures are performed at an interim date, the auditor should cover the remaining period by performing substantive procedures combined with tests of controls for the intervening period, or if the auditor determines that it is sufficient, further substantive procedures only that provide a reasonable basis for extending the audit conclusions from the interim date to the period end. If misstatements that the auditor did not expect when assessing the risks of material misstatement are detected at an interim date, the auditor should evaluate whether the related assessment of risk and the planned nature, timing, or extent of substantive procedures covering the remaining period need to be modified. Oh, yeah. Selecting items for testing to obtain audit evidence when designing tests of controls and tests of details. The auditor should determine the means of selecting items for testing that are effective in meeting the purpose of the audit procedure. Adequacy of presentation of the financial statements. The auditor should perform audit procedures to evaluate whether the auditor should perform audit procedures to evaluate whether the overall presentation of the financial statements is in accordance with the applicable financial reporting framework. In making this evaluation, the auditor should consider whether the financial statements The auditor should consider whether the financial statements are presented in a manner that reflects the following: the appropriate classification and description of financial information and the underlying transactions, events, and conditions, the appropriate presentation, structure, and content of the financial statements, evaluating the sufficiency and appropriateness of audit evidence. Based on the audit procedures performed and the audit evidence obtained, the auditor should evaluate before the conclusion of the audit whether the assessments of the risks of material misstatement at the relevant assertion level remain appropriate. The auditor should conclude whether sufficient appropriate audit evidence has been obtained. In forming a conclusion, the auditor should consider all relevant audit evidence, regardless of whether it appears to corroborate or contradict the assertions in the financial statements. If the auditor has not obtained sufficient appropriate audit evidence about a relevant assertion, the auditor should attempt to obtain further audit evidence. If the auditor is unable to obtain sufficient appropriate audit evidence, the auditor should express a qualified opinion or disclaim an opinion on the financial statements. Documentation. The auditor should include in the audit documentation the overall responses to risk to address the assessed risks of material misstatement at the financial statement level and the nature, timing, and extent of the further audit procedures performed. The linkage of those procedures with the assessed risks at the relevant assertion level and the results of the audit procedures including the conclusions when such conclusions are not otherwise clear. If the auditor plans to use audit evidence about the operating effectiveness of controls obtained in previous audits, the auditor should include in the audit documentation the conclusions reached about relying on such controls that were tested in a previous audit. The auditor should include in the audit documentation the basis for any determination not to use external confirmation procedures for accounts receivable when the account balance is material. The auditor's documentation should demonstrate that information in the financial statements agrees or reconciles with the underlying accounting records, including agreeing or reconciling disclosures whether such information is obtained from within or outside of the general and subsidiary ledgers. (11 divided by 21). Audit considerations. Indicate fit. I keep forgetting my chair. It's broken. Apparently, I use my chair as a fidgeting device all the time. And now I can't. I need a better fidgeting device than this ruler and this chair. And also, I'd like a fidgeting device that I could use in the classroom too, because all of the fidgeting devices that I have are too loud and noisy to use in a classroom. I want one that's silent. Why do they all have to make noise? This one makes noise like this. I mean, I could just hold it, but my cube obviously makes noise, see? I can't cube in glass either. 7 pages. How is this 7 pages? Audit considerations relating to an entity using a service organization. This section addresses the user auditor's responsibility. That is my ruler making a sound against my hand. That's what that sound is. This section addresses the user auditor's responsibility for obtaining sufficient appropriate audit evidence in an audit of the financial statements of a user entity that uses one or more service organizations. Specifically, it expands on how the user auditor... What is it? User auditor. Applies section 315 and section 330 in obtaining an understanding of the user entity. Why are they using the word user anyways? Including internal control relevant to the audit, sufficient to identify and assess the risks of material misstatement, and in designing and performing further audit procedures to responsive to those risks. Many entities outsource aspects of their business activities to organizations that provide services ranging from performing a specific task under the direction of the entity to replacing entire business units or functions of the entity. Hey, I think that actually may have applied in my previous employment situation, because does a janitorial service count as a service organization? You would think it would. Many of the services provided Stop. 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 I can't wait to do Crash Wednesday speed runs later. That was funny. Man, my goodness. My goodness. My goodness. Many of the services provided by such organizations are integral to the entity's business operations. However, not all of those services are relevant to the audit. Services provided by a service organization are relevant to the audit of a user entity's financial statements when those services and controls over them affect the user entity's information system, including related business processes relevant to financial reporting. Although most controls at the service organization are likely to relate to financial reporting, other controls also may be relevant to the audit, such as controls over the safeguarding of assets. A service organization's services are part of a user entity's information system, including related business processes relevant to financial reporting, if these services affect any of the following: the classes of transactions in the user entity's operations that are significant to the user entity's financial statements, the procedures within both IT and manual systems by which the user entity's transactions are initiated, authorized, recorded, processed, corrected as necessary, transferred to the general ledger, and reported in the financial statements. The related accounting records supporting information and specific accounts in the user entity's financial statements that are used to initiate, authorize, record, process, and report the user entity's transactions. This includes the correction of incorrect information and how information is transferred to the general ledger. The records may be in either manual or electronic form. How the user entity's information system captures events and conditions other than transactions that are significant to the financial statements. The financial reporting process used to prepare the user entity's financial statements, including significant accounting estimates and disclosures, and controls surrounding journal entries, including non-standard journal entries used to record non-recurring, unusual transactions or adjustments. The nature and extent of work to be performed by the user auditor. I think I understand why they're using the term user auditor, because they're saying that the user auditor is the auditor who is auditing the auditor that is auditing the organization that is using the services of the service organization. That was funny. The nature and extent of work to be performed by the user auditor regarding the services performed by a service organization and depend on the nature and significance of those services to the user entity and the relevance of those services to the audit. This section does not apply to services that are limited to processing an entity's transactions that are specifically authorized by the entity. Such as the processing of checking account transactions, by a bank, or the processing of securities transactions by a broker. That is when the user entity retains responsibility for authorizing the transactions and maintaining the related accountability. In addition, this section does not apply to the audit of transactions arising from an entity that holds a proprietary financial interest in another entity, such as a partnership, corporation, or joint venture. When the partnership, corporation, or joint venture performs no processing on behalf of the entity. The objectives of the user auditor when the user entity uses the services of a service organization are to obtain an understanding of the nature and significance of the services provided by the service organization and their effect on the user entity's internal control relevant to the audit, sufficient to identify and assess the risks of material misstatement, design and perform audit procedures responsive to those risks. This morning I got up at basically 4:45. That's why I'm hungry, because I ate breakfast at 5 in the morning and it is now 8:39. And you know what I did yesterday? Yesterday I ate breakfast at 4:30 in the morning, and I drank some water and the last time I drank water was like 6 a.m. and then I did not eat or drink anything at all until 5:30 or 5 o'clock. I did not eat or drink anything from 6 a.m. to 5 p.m. That's 11 hours of not eating or drinking. Isn't that fun? For purposes of generally accepted auditing standards, the following terms have the meanings attributed as follows: complementary user entity controls. Wait. What? Management's description of a service organization's system and a service auditor's report on that description and on the suitability of the design controls. Oh yeah, that's right. He did mention the Type 1 and Type 2 reports. What the heck? He said Type 2 report is important. Okay, why didn't I write that down? Dude, he literally mentioned it, and I somehow missed it. I don't know why I didn't write it down. Type 1 report. Oh, man. Management description of management of what? Management of the service organization? They better be talking about that. Management of what? Which management? You've got to be kidding me. They love to specify things except when they don't. They keep referring to management, and I don't even know which one they're referring to. Management's description of a service organization's system and a service auditor's report on that description and on the suitability of the design of controls. A report that comprises the following: management's description of the service organization's system, a written assertion by management of the service organization about whether in all material respects and based on suitable criteria management's description of the service organization's system fairly presents the service organization's system that was designed and implemented as of a specified date. The controls related to the control objectives stated in management's description of the service organization system are suitably designed to achieve those control objectives as of the specified date. A service auditor's report that expresses an opinion on the matters in B1 to 2. Management's descriptions description of a service organization's system and a service auditor's report on that description and on the suitability of the design and operating effectiveness of controls. The only difference between Type 1 and 2 is that Type 2 added operating effectiveness. That's the only difference! Are you kidding me? Why would they distinguish between those two? Why would they have... Oh my goodness. A report that comprises the following management's description of the service organization's system, a written assertion by management of Wow. Stop it. Stop. Stop. A written assertion by management of the service organization about whether in all material respects and based on suitable criteria, management's description of the service organization system fairly presents the service organization system that was designed and implemented throughout the specified period. The controls related to the control objectives stated in management's description of the service organization system were suitably designed throughout the specified period to achieve those control objectives. The controls related to the control objectives stated in management's description of the service organization system operated effectively throughout the specified period to achieve those control objectives. A service auditor's report that expresses an opinion on the matters and it includes a description of the service auditor's tests of controls and the results thereof. Service auditor, a practitioner who reports on controls at a service organization. Service organization, an organization or segment of an organization that provides services to user entities that are relevant to those user entities. Internal control over financial reporting. Service organization's system. The policies and procedures designed, implemented, and documented by management of the service organization to provide user entities with the services covered by the service auditor's report. Management's description of the service organization's system identifies the services covered, the period to which the description relates, or in the case of a Type 1 report, the date to which the description relates, The control objectives specified by management or an outside party the party specifying the control objectives and the related controls. Subservice organization, a service organization used by another service organization to perform some of the services provided to user entities that are relevant to those user entities' internal control over financial reporting, user auditor, an auditor who audits and reports on the financial statements of a user entity, an entity that uses a service organization and whose financial statements are being audited. I just now got to the requirements on page 4 out of 7. Last week I read all of the requirements twice, and it wasn't good enough to do well on the quiz. Obtaining an understanding of the services provided by a service organization, including internal control. When obtaining an understanding the nature of the services provided by the service organization and the significance of those services to the user entity, including their effect on the user entity's internal control. The nature and materiality of the transactions processed or accounts or financial reporting processes affected by the service organization, the degree of interaction between the activities of the service organization and those of the user entity, the nature of the relationship between the nature of the relationship between the user entity and the service organization, including the relevant contractual terms for the activities undertaken by the service organization. When obtaining an understanding of internal control relevant to the audit in accordance with Section 315, the user auditor should evaluate the design and implementation of relevant controls at the user entity that relate to the services provided by the service organization, including those that are applied to the transactions processed by the service organization. The user auditor should determine whether a sufficient understanding of the nature and significance of the nature and significance of the services provided by the service organization and their effect on the user entity's internal control relevant to the audit has been obtained to provide a basis for the identification and assessment of risks of material misstatement. If the user auditor is unable to obtain a sufficient understanding from the user entity, the user auditor should obtain that understanding from one or more of the following procedures: obtaining and reading a Type 1 or Type 2 report if available, contacting the service organization through the user entity to obtain specific information, visiting the service organization and performing procedures that will provide the necessary information about the relevant controls at the service organization, using another auditor to perform procedures that will provide the necessary information about the relevant controls at the service organization, and determine the efficiency and appropriateness of the audit evidence. Obtained by a Type 1 or Type 2 report, the user auditor should be satisfied regarding the following: the service auditor's professional competence and independence from the service organization, the adequacy of the standards under which the Type 1 or Type 2 report was issued. If the user auditor plans to use a Type 1 or Type 2 report as audit evidence to support the user auditor's understanding about the design and implementation of controls at the service organization, the user auditor should evaluate whether the Type 1 report is as of a date, or in the case of a Type 2 report, is for a period that is appropriate for the user auditor's purposes. Evaluate the sufficiency and appropriateness of the evidence provided by the report for the understanding of the user entity's internal control relevant to the audit, and determine whether complementary user entity controls identified by the service organization are relevant in addressing the risks of material misstatement relating to the relevant assertions in the user entity's financial statements, and if so, obtain an understanding of whether the user entity has designed and implemented such controls. Responding to the assessed risks of material misstatement. In responding to assessed risks in accordance with Section 330. Determine whether sufficient appropriate audit evidence concerning the relevant financial statement assertions is available from records held at the user entity, and if not, perform further audit procedures to obtain sufficient appropriate audit evidence, or use another auditor to perform those procedures at the service organization on the user auditor's behalf. Because of controls, when the user auditor's risk assessment includes an expectation that controls at the service organization are operating effectively, the user auditor should obtain audit evidence about the operating effectiveness of those controls from one or more of the following procedures: obtaining and reading a Type 2 report if available, performing appropriate tests of controls at the service organization, using another auditor to perform tests of controls at the service organization on behalf of the user auditor. If, in accordance with paragraph 16A, the user auditor plans to use a Type 2 report as evidence that controls at the service organization are operating effectively, the user auditor should determine whether the service auditor's report provides sufficient appropriate audit evidence about the effectiveness of the controls to support the user auditor's risk assessment. By evaluating whether the Type 2 report is for a period that is appropriate for the user auditor's purposes, determining whether complementary user entity controls identified by the service organization are relevant in addressing the risks of material misstatement relating to the relevant assertions in the user entity's financial statements, and if so, obtaining an understanding of whether the user entity has designed and implemented such controls, and if so, testing their operating effectiveness. Evaluating the adequacy of the time period covered by the tests of controls. Evaluating the adequacy of the time period covered by the tests of controls and the time elapsed. Tests of performance of the tests of controls, and evaluating whether a test of controls performed by the service auditor and the results thereof as described in the service auditor's report are relevant to the assertions in the user entity's financial statements and provide sufficient appropriate audit evidence to support the user auditor's risk assessment. If the user auditor plans to use a Type 1 Oh, he. Hey. That was funny. Fraud, non-compliance with laws and regulations, or incorrect misstatements affecting the financial statements. Wait. They ought to use for harder share evaluate how such matters, if any, affect the nature, timing, and extent of the user auditor's further audit procedures, including the effect on the user auditor's conclusions and user auditor's report. Reporting by the user auditor. The user auditor should modify the opinion in the user auditor's report in accordance with 705 if the user auditor is unable to obtain sufficient appropriate audit evidence regarding the services provided by the service organization relevant to the audit of the user entity's financial statements. The user auditor should not refer to the work of a service auditor in the user auditor's report containing an unmodified opinion. If reference to the work of a service auditor is relevant to an understanding of a modification of the user auditor's opinion, the user auditor's report should indicate that such reference does not diminish the user auditor's responsibility for that opinion. Evaluation of misstatements. Identify. Oh my goodness graciousness, everybody. Wow, that's funny. That was funny. Wow, that was funny.
This section addresses the auditor's responsibility to evaluate the effect of identified misstatements on the audit and the effect of uncorrected misstatements, if any, on the financial statements. Section 700 and Section 703 The auditor's conclusion takes into account the auditor's evaluation of uncorrected misstatements, if any, on the financial statements in accordance with this section. Section 320 of materiality addresses the auditor's responsibility to appropriately apply the concept of materiality in planning and performing an audit of financial statements. Objective.
The objective of the auditor is to evaluate the effect of identified misstatements on the effect of identified misstatements on the audit and the effect of uncorrected misstatements, if any, on the financial statements. For the definition, misstatement, a difference between the reported amount, classification, presentation, or disclosure of a financial statement item and the amount, classification, presentation, or disclosure that is required for the item to be presented fairly in accordance with the applicable financial reporting framework. Misstatements can arise from fraud or error. I keep doing the chair thing again. I pushed it so far away that I will not do it again. I will actually be able to just fix that later today because I'm going to stream Crash with Sandy. I always put my computer on my chair and I'll notice that my chair is broken, so I will, therefore, what if I don't notice? That was funny. That was funny. Misstatements also include those adjustments of amounts, classifications, presentations, or disclosures that, in the auditor's professional judgment, are necessary for the financial statements to be presented fairly in all material respects. Uncorrected misstatements. Misstatements that the auditor has accumulated during the audit and that have not been corrected. Requirements. Accumulation of identified misstatements. The auditor should accumulate misstatements identified during the audit other than those that are clearly trivial. Consideration of identified misstatements. As the audit progresses, the auditor should determine whether the overall audit strategy and audit plan need to be revised if the nature of identified misstatements and the circumstances of their occurrence indicate that other misstatements may exist that, when aggregated with misstatements accumulated during the audit, could be material, or the aggregate of misstatements accumulated during the audit approaches materiality determined in accordance with Section 320, communication and correction of misstatements. The auditor should communicate on a timely basis with the appropriate level of management all misstatements accumulated during the audit. Evaluating the effect of uncorrected misstatements. Prior to evaluating the effect, the auditor should reassess materiality to confirm whether it remains appropriate in the context of the entity's actual financial results. The auditor should determine whether uncorrected misstatements are material individually or in the aggregate. In making this determination, the auditor can consider the size and nature of the misstatements, both in relation to particular classes of transactions, account balances, or disclosures, and the financial statements as a whole, and the particular circumstances of their occurrence, and the effect of uncorrected misstatements related to prior periods on the relevant classes of transactions, account balances, or disclosures, and the financial statements as a whole. Documentation. The auditor should include in the audit documentation the amount below which misstatements would be regarded as clearly trivial, all misstatements accumulated during the audit, and whether they have been corrected, and the auditor's conclusion about whether uncorrected misstatements are material individually or in the aggregate, and the basis for that conclusion. What was 328.1? Oh no. Materiality in the context of an audit. Reference paragraph 6. Oh, come on. I want to just cram studying like 10-15 minutes before class, but the problem is I can't because the only way for me to do that would be to download all those PDFs on my phone, I guess. Or open my computer while I'm in the car, which is really dumb. Or go to the library and go on my computer for like 2 minutes and then go to class. Like, man, why can't I just go to class 20 minutes early? Oh. Going to class early helps me in my other class, because it's an 8 o'clock class, meaning there's no other classes before it, so I can just go there whenever I want. Like last time I went there, like half an hour early. But I can't do that in this class. I can only, by the time the stupid other class gets out, and then I get into class and my stupid computer takes 5 billion years to turn on, I only have like 5 minutes to review the stuff. Not even 5 minutes. And I hate putting the stuff on my phone, because look, it would be so hard to put all this stuff on my phone. the circumstances of the entity for the period. For example, the entity may have undertaken a significant business combination during the period. The applicable financial reporting framework, including changes therein. For example, a new financial reporting standard may require new qualitative disclosures that are significant to the entity. Qualitative disclosures that are important to users of the financial statements because of the nature of an entity. For example, liquidity risk disclosures may be important to users of the financial statements for a financial institution. Ooh. I don't want to study anymore. So, bye.